This is Scott Becker with the Becker Private Equity and Business Minute podcast, the Becker Business Minute podcast. We had a chance to review an article this morning in Yahoo Finance about the no landing scenario. And the concept of the no landing scenario is that the Fed so manages the money tightening and there continues to be enough growth that we don't actually end up with a recession in reaction to the high interest rates that the Fed is putting forth. And the Fed's already put us at, the 1 year's about 5%, the 10 years back to almost 4%, the 2 years about 4.6, 4.7%. And that's compared to really about zero rates a year or 2 years ago. So considerable tightening. At the same time, the Fed is finding that inflation, which is up at 8 or 9%, which is down to 6.4%, is not coming down anywhere near as quick as they'd like. At the same time, the third stat is unemployment remains low. So this leads to the concept people kind of contemplate, can you have it all? Can inflation come down? Can you not have a recession? And can you have rates rise to fight inflation? And the resounding answer, at least in this article that we're following, was no, you really can't. And there's other things you have to be aware of as well. Partly, you've got the Fed fighting inflation with interest rate hikes, and inflation's not coming down quickly enough. You have the economy is expanding. And one of the great questions you have to ask is, as we've talked about earlier, and we're obviously somewhat of a deficit hawk, so bear with me, the amount of federal debt has gone up by $8 trillion over the last 3-4 years. And what that allows to happen is that allows the economy to keep on growing, even in the face of the Fed trying to fight growth and fight inflation with interest rate hikes. Now, the debt's gone from 23 trillion to 31 trillion. That can allow you not to have a reckoning, or at least to put off the reckoning, meaning that there will be no landing, no recession, as long as you keep on expanding debt. And this has really been the effort of both President Trump and President Biden. While they're in office, they want the economy to expand. They don't want high unemployment, and thus we increase debt to fund those things. Now, the challenge to this, of course, is as follows. At 31 trillion in debt, at 5% interest rates, now you're looking at a cost of borrowing that's $1.5 trillion a year. And that might not seem like that much. I mean, it's hard to even think about these different numbers. But if the annual federal budget's about 2.4 trillion, to 3 trillion, now you're talking about literally half or more of the budget being taken up by interest payments on the national debt. And this is far different than a year ago when interest rates were down at 1-2%. And so the cost to service that debt was a few hundred trillion versus 1.5 trillion. Big difference. Versus $1.5 trillion, 300 billion versus $1.5 trillion to service the debt. That's a big difference in the cost of service debt. So sooner or later, this all catches up to us. But in the meantime, as long as the government expands the debt they take on, and consumers keep on expanding the debt they take on, you could have a no landing scenario for a period of time. But sooner or later, you sort of can't have it both ways. The Fed working hard to bring down inflation, the government and consumers borrowing like crazy, which adds to inflation, and not at some point have a reckoning as people can no longer afford the interest on that debt they've taken on. On the consumer side, there's nearly $1 trillion in debt that's been taken out on credit cards alone, and that's at an annual rate of 20%. At the government side, there's 31 trillion in debt that's been taken on at probably an average rate of 4 to 6%, somewhere in there, which is the cost of that debt. The 1 year is about 5%. But in any event, that's what we're watching currently, this concept of can you have a no landing scenario? And you can for the time being, but not forever. Thank you for listening to the Becker Business Minute and the Becker Private Equity and Business Minute podcast. Thank you very much for listening.